Why is it going up to 13 million a coin? Well, for the last 10 years, it's been appreciating 60% a year on average. For the past 4 years, 60% a year. Okay, the S&P index is increasing about 15% a year for the past 4 years. The money supply, the dollar, is increasing somewhere between 7 and 10% a year, maybe 10% a year for the past 4 years. So once you understand that, Bitcoin is simpler, more thermodynamically sound than an equity portfolio.
Bitcoin has consistently outpaced traditional financial assets, boasting an average annual appreciation of 60%, a stark contrast to the S&P 515% growth rate over the same period. This remarkable performance stems from Bitcoin's unique characteristics, which position it as a fundamentally different asset class. In an interview, Michael Saylor believes Bitcoin is immune to inflationary pressures, unlike equities or fiat currencies. While the dollar's supply has expanded by 7.1% annually in recent years, eroding its purchasing power, Bitcoin's supply remains fixed at 21 million coins. This scarcity, combined with its decentralized and immutable nature, makes Bitcoin a thermodynamically sound asset, one that is not subject to the counterparty risks, political instability, or entropic forces that often affect traditional investments. As global investors seek refuge from inflation, market volatility, and geopolitical uncertainty, Bitcoin's unparalleled ability to store and grow wealth becomes increasingly evident. The asset's simplicity, resilience, and predictability position it as a critical cornerstone of the 21st century financial system. With its trajectory poised for continued growth, Bitcoin represents a paradigm shift in how value is understood.
Bitcoin is the world's first perfect monetary asset. And by perfect, I mean hard capped at some fixed amount. Every other monetary asset you could use as a long-term store of value has some leakage or inflation in it, whether it's gold or silver or real estate or art or whatever it is. There's entropy, there's degradation. And so the ideal perfect monetary asset would be some fixed amount of something for the next 1,000 years or 10,000 years. And so Bitcoin's the first thing like that. Even things we think that are scarce, like real estate, we can make more real estate. We make more waterfront property even. Half of Boston and half of Miami Beach is man-made waterfront property. So you start with that idea of scarcity. So why does it go up in value? It goes up because the supply of dollars is increasing 7% a year for the past 100 years. And the supply of weak currencies is more like 14% a year. And that means the dollar loses 99.9% of its value over 100 years. A weak currency would lose, 99.9% of its value sometimes over 20 years. So the reason that the value of scarce, desirable stuff goes up is because it's difficult to manufacture with a factory. You ever go to Hershey's, Pennsylvania, you see a factory and they spit out candy bars, and they spit out candy bars at 50,000 an hour in a box, and you can't create 50,000 candy bars, but they did it very well. That's why they created a company. So if a factory can make it, the price is going down. If a politician can print it or declare it, the price is going down. If technology, or if a robot can create it, if a technologist can make it cheaper, if it's subject to Moore's law, if the AI can spit it out, you don't want to store your monetary wealth in anything that human ingenuity or politics creates more of. So that just leaves you with things like Da Vinci paintings. You like scarce art of dead people. You'd prefer beachfront property in Palm Beach over waterfront. It's harder to create beach than it is to create waterfront. And when you look at those things, an acre of land in Miami Beach has gone up a factor of 1,000 in 100 years. Beachfront property in Palm Beach might have gone up 2,000. I mean, these things went from $10,000 an acre to 20 or 30 or 40 million an acre. So the general idea is the currency supply is increasing. there are certain scarce desirable assets that are not increasing very fast. Bitcoin is hard capped. It's not increasing at all. So why is it going up to 13 million a coin? Well, for the last 10 years, it's been appreciating 60% a year on average. For the past 4 years, 60% a year. Okay, the S&P index is increasing about 15% a year for the past 4 years. The money supply, the dollar, is increasing somewhere between 7 and 10% a year, maybe 10% a year for the past 4 years. So once you understand that, Bitcoin is simpler, more thermodynamically sound than an equity portfolio, right? The thing that's going up a bit faster than the inflation rate is a diversified portfolio of high quality companies like Tesla and Apple and Google and the like. They can maybe outperform a couple of percent due to human ingenuity and robots and AI and Moore's law technology. But companies have attack surfaces. So companies have counterparty risk. The risk factors of companies are they might get sued for antitrust. China doesn't like Nvidia. Europe might tax Apple. A union might unionize Amazon. The US government might sue Microsoft, right? If it's a really good company, it's going to get a regulatory onslaught. And if it's a bad company, it's going to get crushed by a bigger company. And then maybe it just gets unlucky because of a war or famine or a hurricane or bad weather. Or maybe you're located in a city and the tax rate triples. And so there's a parade of horribles that cause you to lose money on a corporate investment or a financial investment. Or maybe you have the best company in the world and it happens to be in Venezuela and the government changes. Or, the people used to have really good companies in Cuba. And then Castro took over. And then all of a sudden it becomes illegal or the currency collapses or they expropriate your property. You have the best oil company in Venezuela and then the government takes it. Okay. Or maybe you have a great company in Russia and the currency collapses like it did in 98. Or maybe you have a great company in Brazil and the currency collapses like it did about 30 years ago. Things that are in the real world, things that are subject to political fate or weather or war or famine or competition, or maybe you have the world's greatest photo company like Kodak, oops, or Xerox, right? The world's full of examples of really great companies and maybe really great product, maybe a great land, maybe you own buildings, but the buildings were in Egypt and there's a coup. Or maybe the buildings were in downtown Afghanistan, in Kabul. Oops. Okay, so what is Bitcoin? Well, it's not in the real world. It's not a company. There's no counterparty risk to a company, no counterparty risk to a culture, no counterparty risk to a currency, no counterparty risk to a creditor, right? You're stripping away counterparty risks. And so when you strip away all the risk, you get pure digital property.
Michael Saylor passionately advocates for Bitcoin as the world's first perfect monetary asset, a revolutionary innovation in human history. Unlike traditional assets such as gold, silver, or real estate, Bitcoin has a fixed supply of 21 million, immune to inflation, entropy, or manipulation. It is the ultimate scarce resource in a world where everything else can be replicated, degraded, or devalued. Saylor explains the economic forces driving Bitcoin's rise. Fiat currencies, he notes, lose value steadily as governments print more money. Over the past century, the dollar has lost 99.9% of its purchasing power. In contrast, Bitcoin's value increases as capital flows into it, seeking a safe, predictable haven from political, environmental, and economic risks. For Saylor, Bitcoin represents security, purity, and resilience, a digital property untouchable by geopolitics or human interference. As adoption grows, he foresees Bitcoin climbing to 13 million per coin by 2045, cementing its place as a fundamental pillar of global wealth. Let's watch more clips from the interview.
Why is it going to go up? It's going to go up because capital is flowing from the more entropic state, from the state of anxiety and risk and confusion toward the more ordered state, a less risky state. Think of water at the top of a mountain. Why does the water flow downhill? Accidental? The waterfall. Scary turbulence? But what if it stops? It's flowing downhill because of physics, because it's a lower energy state for the water to be at sea level than for the water to be 1 mile up. Why is money flowing into Bitcoin? I'm going to take all your money, put it in random countries and random banks in Africa. Maybe I spirit it with a magic spell. And then I say, okay, it's Monday morning. Your money's in random banks and random countries in Africa. Would you like to bring it back to the US or would you like to leave it there? Accidental? No. You're going to bring it back to a place you feel comfortable. Capital flows to security. It flows to where it's treated the best. And so money is flowing, capital. I'm using money as a phrase for long-term capital. It's flowing into Bitcoin because it's running away from Russia and it's running away from China and it's running away from Africa and it's running away from Venezuela and Cuba and it's running away from South America. It's even running away from Europe. If you ask the Europeans, the very simple test, do you prefer the digital dollar or the digital euro? 99-1, they prefer the dollar to the euro. In their own country, they don't want the euro. Everybody wants the dollar. Everybody wants to live in the US. Everybody wants their property in the safe apex network of the world. So the capital is flowing into Bitcoin at 60%. The traditional method of storing your long-term capital as the S&P index is 15%. What's going to happen is that more and more capital is going to flow from the 15% to the 60%. More capital is going to flow from the 20th century to the 21st century. You got $1 billion of warehouses built in 1980. They're rusting, right? They're falling apart. You're going to have to rebuild them. You want to rebuild them for another 40-year run, or you want to put it into Bitcoin, right? So money flows from the past to the future. Money flows from physical to digital. Money flows from high risk to low risk. Money flows from insecure to secure. Money flows from the east to the west. Bitcoin simply represents the highest form, the least disorderly, least risky form of property rights. The 60% will track toward the 15. So over time, the S&P index and Bitcoin will head toward each other. So what do I expect? I think Bitcoin, as it gets bigger, it goes from 60% growth rate to 58 to 55 to 52 to 50 to 48 to 38 to 35 to 33, and the traditional world, the 500, the $150 trillion of traditional equities, that's basically a 15%er or 12 to 15%er. They'll start to incorporate Bitcoin. Maybe they'll start to creep up toward Bitcoin, but they'll also struggle with all the entropic risk and competition and weather and war and famine. So they're always going to struggle. Bitcoin's going to become half the size of equity. It'll start to head up toward the size of equity. And then there's $300 trillion of fixed income, bonds, preferred stocks, all sorts of ETFs that hold fixed income instruments, currency equivalents, sovereign debt. That yields about 5% right now. So 5% before tax, maybe 3 or 4% after tax. So as people get more comfortable with Bitcoin, they're going to move money toward Bitcoin. And then companies like MicroStrategy, well, we're going to create an equity that pulls capital from the equity capital markets, from the Magnificent Seven, from the S&P. It'll flow into MicroStrategy stock. And then we will create bonds, and the bonds will pay you twice as much or 3 times as much as the bonds in the traditional capital market. So as we issue those bonds, the capital that's in fixed income will jump onto a Bitcoin-backed bond, and the equity will jump onto a Bitcoin-backed equity. And over time, you've got $500 trillion of this traditional capital. I think over 21 years, Bitcoin goes from 60% ARR down to 20% ARR. And if you blend it, it's like an average of 29% ARR. And if you crank 29% ARR into a 21-year model, that takes you from where Bitcoin was, which was about 55,000 a coin in the middle of 2024, when I was at Bitcoin Nashville and I gave that speech and I gave that forecast. Bitcoin is about 55,000 or 60,000. And it just climbs up with some volatility. You know, it surges up, it crashes down, it surges up, it crashes down, serpentine, and it climbs to 13 million a coin in the year 2045. And as it climbs, it becomes a greater amount of the world's capital. Instead of being $2 trillion, it becomes $280 trillion. But you know, the amount of wealth in the world goes from 900 trillion to 4,000 trillion. And there's a lot of bonds and there's a lot of real estate and there's a lot of equity. And it's not like Bitcoin eats everything. It's just like Bitcoin goes from being a tenth of 1% of the world's wealth, you know, to being 7% of the world's wealth or something like that.
Bitcoin has firmly established itself as a revolutionary financial asset, poised for another significant bull market in the coming years. After reaching a record high of $108,300 in late 2024, the cryptocurrency experienced a modest retreat but remains on track for exponential growth. Analysts predict that Bitcoin could reach $225,000 per coin by the end of 2025, driven by accelerating institutional adoption, favorable regulatory developments, and the increasing availability of Bitcoin spot ETFs in the US. In 2024 alone, Bitcoin rallied nearly 119%, underscoring its potential for wealth generation. With a projected market cap of $4.5 trillion, Bitcoin's dominance would represent 25% of gold's market value, marking its growing influence as a store of value. The ecosystem surrounding Bitcoin is also set to expand. Analysts foresee a booming market for crypto miners, with the total market cap for mining companies expected to exceed $100 billion in 2025. Pure-play mining firms like Marathon Holdings and Riot Platforms are poised to outperform Bitcoin itself, benefiting from improving fundamentals. As global capital increasingly shifts toward secure digital assets, Bitcoin continues to outshine traditional equities and fiat currencies. With its scarcity and proven performance, Bitcoin remains a transformative force in modern finance, attracting investors seeking stability and growth in an uncertain economic landscape. Don't forget to like and subscribe, and let's keep this bull run going.